The Fed is an important regulator for you. Who would you like to see as the next Fed chair?
I think there's some great candidates whose names are out there.
What would you like to see the Fed doing? You described a really positive environment right now in the economy and for consumers. Market expects the Fed to cut rates 2 more times this year. Do you agree with that? And do you think that's right?
I think, I would start with the Fed chair job is like a thankless job. You think about it. It's, a lot of people have thankless jobs. Traders have thankless jobs, financial advisors, people who have to come in and every single day get judged based upon what they do, based upon the markets. And that's what the Fed chair always has to do.
Yes, but it's also one of the most powerful jobs in the world.
It is one of the most powerful jobs in the world, but it's very, very hard to prove anything as the Fed chair because you don't know what the outcome would have been if the Fed did something different. And so that just leaves the whole environment open for everyone to criticize you. And very often, the voices that you hear are the critical voices. And again, I go back to what I said before, when you're inside a company and someone shows up, you don't know the circumstances, you don't know all the facts, you don't know what they were going through. It's very easy to sit here 5 years later and be critical of something. And so, listen, to get to your question, I think that I think the way Chair Powell has described it is as open as you can be, which is I think what we can ask for, which is there are risks in the system, right? There are, and once if you get behind the 8 ball on some of these risks, right, which could be potentially on the downside, lower growth and higher inflation, it's a really bad outcome. It's really hard to get out of. And so the idea of some more rate cuts, it is risk management. And so you balance, what are the negatives to do that versus the positives to do that? And it certainly feels like it's more balanced to protecting the downside. Could be wrong, but there's no riskless answer whether you cut or you don't cut at this point.
You think it's a bigger risk now that we have weakness in the labor market and the economy than higher inflation?
I think there are, I think what we see is strength, but there are things which should make us nervous, right? You have to look at, the company's lack of willingness to invest, lack of willingness to expand inventories, lack of willingness to hire to get ahead of things, and say, that has the potential to slow growth. We haven't talked about AI,
yes,
but
we're getting there.
AI will impact hiring decisions. So you think about, and then you look at just the risks that are embedded in the marketplace and say, these are risks to the downside that you just don't want to get behind.
But how is lowering rates going to help if AI is taking jobs?
Well, listen, I think lower rates help consumers, right? Just broadly, and if you look at those that are struggling the most, rates matter to those people. Rates don't matter to a lot of the people sitting in this room the way it matters to those folks. And so if you want to have an impact on that population, it absolutely does make a difference. So
yes, what do lower rates mean for Wells Fargo? Do you do better if rates are falling or worse because it impacts the profitability?
So first of all, moving rates is generally, stable rates is not always a great environment for us, and zero rates is a bad environment for us. Things in the middle, we can generally figure out, how to do okay in those environments. So, and I say this, and it might sound cliche, but it's true. We don't really care about the NII next quarter. We do care.
I think your investors care.
Our investors care. Well, it depends who our investors are. Depends who you define as an investor. The people that buy the stock that intend to own it for the next 5, 10, 15 years don't care. Okay?
The analysts care.
Analysts, the hedge funds, the people that trade the stock around the day of earnings care, because it's now become all about guidance and meeting and beating and all this stuff which has nothing to do with the actual trends in your underlying business. So, we care. But what we really care and what really will help us do well is if the economy we are a US bank. 95% of our revenues come from the US. We do have businesses overseas, but those businesses, for the most part, are there to serve US companies that operate globally. And so it really is true that when the US is doing well, we do well. So that's really what we root for. And in that kind of environment, we'll do really well.